Hello. I just finished editing a conversation I had with the founder of a company that, I kid you not, is trying to solve a $400 billion problem that faces an entire continent. Not the US, not Europe, but Africa, the world's fastest growing continent. What is that problem? That problem is the funding gap that exists for small to medium sized businesses. Right now, there is an issue when it comes to fragmentation of financing sources, be it grants, banks, debt, equity, blended finance, etc. All these kind of disparate instruments that exist, and funneling it to small to medium-sized businesses that tend to, from a data perspective, from an underwriting perspective, be somewhat illegible to typical financiers, which is why big banks deal with big companies and with governments, but there's this gap in the messy middle which tends to make up the bulk of what economic growth should be and has tended to be throughout history. So I did this interview with Nic, the founder of this company called Vula, that's working on this, applying essentially AI to the act of having a fundraising copilot on the side of the business founder and CEO, right? Helping them tap into those financing resources. But two, they also have an interface and process for helping the capital providers themselves underwrite those companies and make better decisions on that front. And so this in total is a kind of immense problem, but also immense opportunity, and it's exactly the type of thing that a domain expert like Nicholas, combined with an immense cutting edge technology like LLMs, AI, and new ways of kind of conceptualizing unstructured data, right? And then a massive problem, which is incredibly meaningful in the grand scheme of things, which is unlocking economic growth in Africa. So we've mashed all three things here, and it's been a fantastic conversation. It's a conversation I did a while back, but I decided to publish it here as the first episode of Industry Meets AI, and so I hope you enjoy it. If you have any feedback, let me know. This is the first one, and that is all. Let's get into it. Hello, and thank you for joining me on the Frontier Markets podcast. I'm your host, Krishan, and my guest today is Nic Rawhani from Vula, or as I like to call him, Nic from Vula. Clean and simple. Vula is backed by Entrepreneur First in London, and their mission is to make fundraising easy, or at the very least, less painful for companies across Africa. I'm eager to learn more about how they do that. And so I'll start by asking Nic the original question here, which is, what is the origin story of Vula? Both on a kind of tactical level, but also, I just came back from a walk with a friend. We were talking about the mythology of great companies. I'd love to hear both the timeline on a practical level, but also a mythological story of kind of Vula and what it kind of like stands for.
I think to start with the mythology, because I think that's a beautiful question, Krish. Vula is a Xhosa word. It means open. And our goal at Vula, the founding principle, the DNA, is the question of how we open up this beautiful, incredible, and mysterious market to a humongous set of very, very thirsty investors who want outsized returns and who keep complaining that they have nowhere to go. And we just see this incredible landscape, this incredible business landscape, this incredible talent landscape that is the entire African continent that is so untapped. It's crazy. And our entire ethos is, how do we open this? So now you know some Xhosa. On a practical level, before founding Vula, I was an associate at McKinsey, and a big part of what I focused on, was McKinsey's London office. So I was doing a lot of private equity. I was doing a lot of energy stuff. My speciality in engineering is sustainable energy. But one of my passions and passion projects that I took up at the firm was all about enabling African startups and scale-ups. Big project that I did kind of had me based out of Lagos, Nigeria, for 4 months, leading a team there, really doing two things. One was asking the question, what are the barriers for really talented founders and really incredible companies that are looking to scale up? What are the barriers that are preventing them from doing this? And the other one was really helping these companies to raise around and to get in touch with investors and to identify really promising companies. And was that
Yeah, it's fine. It's fine.
really identify promising companies? And I think what I found being there was the reality of this arbitrage opportunity, which is that there is such incredible talent, business people who are doing uh, crazy things, identifying real problems, not making up weird problems and I don't know, Web3 chicken fighting betting. I love Web3, but Web3 chicken fighting betting does not require a $26 million pre-seed raise. Okay, I'm just saying that.
Are we not a fan of Chicken Chain?
No, get chicken chain out of my face. But I'll tell you what is, right? Like fundamental questions like how do I finance my kids' education? Fundamental questions like how do I increase my output as a smallholder farmer when there are 40,000 other smallholder farmers around me and no one has taken the time to just show me the small incremental improvements I can make. They can basically transform my entire province. Um, how can I leverage this natural form of community, which in Africa is just natural to us, in order to create better financial security for myself and for my family, create financial opportunities? How do we take these ancient structures, things like stokvels in South Africa, collective approaches to community security, and scale them up with new digital approaches? There are such cool questions to ask, and that many people are asking. But the moment they look for investment, they are met with the highest walls, the deafest ears, and the most tightly closed eyes. Um, and it was just on the frustration of that and on seeing this incredible talent that I realized something kind of has to be done. And of course, Vula is not the first company that's trying to do something about this. We have a beautiful history of many talented entrepreneurs and business people trying to solve this problem before. But there are a number of really unique things that are happening in tech, with our own talents, with the market itself right now, that just make this a super wonderful time to be trying to solve this problem. And I think our approach is also really unique. So my co-founder Alex Goff built AI for IBM before this. And then he was also working at dunnhumby, where he was working on with like super large data sets, like the world's largest credit card data sets for Walmart and stuff. And so his mind is based around how do we create amazing matches? How do we do deep contextual pairing of data? And that just lent itself really nicely to this question of how do we massively simplify funding in a super complex funding landscape. One of the, everybody always asks like, why Africa? What's unique about Africa? Blah blah blah. I'm sure on your podcast, Frontier Markets knows everything that's unique. You know all those factoids. But I think that the reality is like one of the really unique aspects of our continent is that we have such a diverse set of players who are allowed to play with so many different agendas when it comes to financing. We have the classic financiers, we have equity players across scales, we have a slowly developing venture capital market, we have debt players, we have commercial banks, but then we also have development financiers, we have charities, we have concessional financiers and impact investors. And it's like when you have so many different incentives, how do you align these incentives to actually enable a market to flourish instead of providing the wrong people with the wrong opportunities and crowding out the right people from having those opportunities? And no one's figured that out yet. It doesn't matter who you talk to. Like everybody knows it's really, really tough. And it's tough because we've also got a culture right now, like the kind of Silicon Valley VC culture, which has proven itself to be so successful, in the US and in Europe, in countries and in regions that have this fundamental infrastructure layer already in place, so that you can do very low marginal cost scaling, which is required for venture capital to work. And then we sort of just emulate a lot of that culture, unfortunately, and we make a lot of noise about it. And don't get me wrong, there are plenty of amazing companies that require venture capital funding and amazing VCs who are operating on the continent. So many of them are good friends of mine. But at the same time, this isn't necessarily the model that is going to create broad-based transformation of our business ecosystems. We need to kind of be original, and we need to use the community aspect of the venture capital startup world. We need to tap into the enthusiasm, the hustle culture, but it doesn't necessarily need to have the same financial structure, because we don't necessarily have the same infrastructure, financial or just physical infrastructure that can support that. So all of that is a really long answer to the type of thinking that was behind why we need to start Vula. At the basic level, it's about opening up this incredible pool of talent to a more just and equitable approach enabled by technology that stops founders from wasting their time on things that they really don't need to be doing. Paul Graham, shout out to PG.
DG, oh yeah.
Yeah, he loves to say this thing in a couple of his essays about how being able to pitch your company well as a founder is a really good indicator of your ability to be a successful CEO, or to run a company successfully. And I agree with him, of course, in most cases. But I think in the African case, it's really interesting because our class of investors is so far divorced from most of the markets we're trying to serve, that I agree it's important to be able to tell a really convincing story to your customers as a founder in African markets. But that doesn't necessarily correlate to being able to tell a good story to the types of investors that you're going to be coming across. And that might be in really practical ways, like English isn't your mother's tongue. You didn't study overseas, and so you can't impress investors in the way they want to be reassured. Or it might literally be, cultural storytelling, the type of comfort that overseas investors want for a founder that they're going to feel like they trust. And so a big part of what we're trying to do is also help to create that trust and to overcome those barriers and those prejudices which might sit in the hearts of investors, and enable that to no longer create these blockages, because there are investors that want to put their money in and there are founders who need it, but there's just so much noise in between.
That's incredibly interesting. So, two particular kind of points I want to hone in on from what you shared here. First is this idea of making trust legible, right? Making it easier for outsiders to understand when inherently you have this outsider-insider dynamic, and using technology to do that. Historically, the interesting example here is credit ratings agencies, where their role in the early 1900s was fundamentally you had a lot of new companies coming onto the stock market. You had these railroad companies, you had oil and gas companies, very gunslinging Wild West mentality, especially in American capital markets. And companies like Moody's and Fitch came to fruition in particular because investors were saying, how do we know whether this company is something that's worth investing in or not, at least on a kind of like base analysis level, right? And this ends up being this, three-way kind of monopoly, so to speak, that exists right now in the market. And a big kind of narrative that people talk about is the lack of kind of, effective credit ratings when it comes to African, both sovereigns, but also companies as well, because which raises the cost of capital in these regions. I think that was very appropriate for that time in history. Now, the ability to crowd in more forms of data to get a better view of the character of the types of people you're investing in, to understand the markets themselves, and also by necessity, the need to do that when you have capital existing in different geographies to where you'd want to invest it. It's an incredibly exciting prospect. Two examples that I want to point to here. One, there's a company called Pioneer.app, which their kind of fundamental model here is, for early stage companies, what is the best indicator of progress? It's not EBITDA, it's not margins. Maybe people kind of point to founder pedigree, but really what is that meant to point to? It's meant to point to the velocity at which a founder is moving in terms of either accomplishing milestones or making things happen, testing out hypotheses, iterating, etc. And so what do they fundamentally have? They have this kind of gamified competition where every single week you update to the crowd what progress you've made in that kind of process. They use that as a kind of inbound funnel for investing in founders. Mind you, this company has kind of like evolved in a different direction now, but that's part of what they used to do, which I thought was very interesting as a bottoms up signal. Another one that I find very inspiring here is a company called Axial. Axial does it for the lower middle market in America. So you have a lot of companies that have, say, between $3 million to $10 million in EBITDA. That is a very fragmented ecosystem where you don't have investment banker coverage, you don't have analyst coverage. So how do you make that more legible? Well, they map out that ecosystem and they have scorecards for all of the different types of service providers that may exist in that ecosystem and region. So you'd have, for example, the best small market, legal analyst in Wilmington, Alabama. And there's a bunch of companies that they kind of analyze there. And they've used technology to kind of do that. And so I'm very excited by the story you've told on Vula. One final thing, if I may, is also one of the entry points to frontier markets for myself was a conversation that we had at this think tank I used to work at called the Charter City Institute with the previous public works minister of Liberia, this gentleman called Jude Moore. And he was talking about the difficulties of financing basic roads in the country. He's talking about the difficulties of, one, telling the story, right? Two, creating the right financing structure to produce a return. Three, lots of constraints in the balance sheet. And a whole other slew of kind of constraints that were getting in the way of that process. And I think that was a turning point for myself, where at that time, crypto was ripping, and I enjoyed some of the more playful parts of crypto as well. Not necessarily chicken chain, but stuff that was kind of similar. And I was like, wow, it's easier to raise funds for a JPEG than it is for a road. Yeah, it's kind of absurd. And so that kind of like inspired me to learn a bit more about kind of like fintech and cost of capital and these kind of financing structures in these regions. So I'm very glad that you're tackling this problem. It also fits with my origin story as well.
I mean, that's beautiful, because I actually want to touch on that a little bit. I think the analogy that you gave of like US credit markets is a really interesting one, because it also points to a history where we've been used to basically a single standard that determines whether or not a company is investable or bankable. You had Moody's that said, okay, this is our credit rating, and everybody says, oh, thanks, Moody's, for all of your approach, and we're just going to accept your approach because all of us, we have a unique investment thesis, which is how we compete on the market as investors, but we're actually all looking at the same 5 metrics, and we're just going to specialize in which companies, which verticals, which cities, which geographies we're going to focus on. I think what makes this a really interesting problem is that you have kind of a third body in this that further complicates the issue, which is that you actually have a spectrum of risk appetites from the investors themselves, which means that the investors who are looking at Africa do not have the same agenda and therefore do not have the same standards. There is such a wide range of mandates for organizations that are looking to invest in Africa, from the simple commercial return to increasing one or a few particular sustainable development goals, to enabling certain tech ecosystems, to political, deeper political agendas, which mean that they don't need or require commercial returns at all. There are a bunch of amazing family offices based out of Salt Lake City, Utah, from millionaires or sometimes billionaires from the Church of the Latter-day Saints, who go to visit Africa during their 2 years as youth to go and teach their faith to these other countries, and who fall in love with the place, and who basically make a commitment that, when I'm 40, when I'm 50, and I've got the money, I'm going to enable this place to thrive. I love Angola. Let's make Angola work. There is no expectation of a commercial return, but there is $400 million sitting there waiting to be invested in some sort of a company. And the real question that then kind of moves forward is not necessarily how do we simply create the trust by being a third party who decides on what the standard is and rates these companies, but rather how do we enable these companies to generate the type of material that a broad range of investors with different agendas might require a unique combination and permutation of, and enable that to happen instantly, and enable that to happen painlessly, and front load that data so that the moment that investor wants that info, it can be there at their hands and they can make an informed decision. And that's kind of our goal. Our goal is simply to have an African entrepreneur at any stage of their business's growth log on, provide whatever information they have, and see their top list of potential financiers across all capital markets, whether that's grants, equity, debt, it doesn't matter. That's our dream. That's what we're working towards, because we believe that if we can put a tool like that into the hands of the youngest continent in the world, put that in the hands of the fastest growing continent in the world, the most untapped potential middle class market in the world, we create ecosystems that promote prosperity at a level that hasn't ever been seen before.
Wonderful. It's essentially an investment banker for every company.
There you go. That's
digitized.
exactly.
So more tactically, one thing that I saw that you guys have done recently is you've released a grant matching program for small to medium-sized businesses in Nigeria. And this is in lieu of a recent kind of, when I say recent, I mean, this has been happening now for quite a few years, but what one might call some funky business with the currency in the country. And, we were joking before about how in the last few years, every single Nigerian has become an expert on monetary economics because of the fluctuations of their currency and having to deal with just the oddness of the FX situation there. Could you share some context on what the situation in Nigeria is with the local currency, that's the Naira, and also explain how, one, what has happened there, two, what are the main problems that have emerged from that, and three, what this kind of grant program you guys have kind of helped out with is doing in the area?
Okay, wow. Okay, so much to go through there. Excited to try and pick this apart and explain it in a simple way. First of all, shout out to all of my Niger brothers and sisters out there. We're with you. Let's make this happen. Stay on your hustle.
Hell yeah.
So I think it's useful to first understand what was happening before in Nigeria. You had a currency, the Naira, that was being heavily controlled by the Central Bank of Nigeria. And what that meant, the simplest way that I can put it is that every morning the Central Bank of Nigeria told commercial banks what the rate was that they could trade the Naira in for US dollars. Okay. But the problem is when you're trying to do that type of control in an import heavy economy, which Nigeria is deeply dependent on a bunch of imports. Again, this is one of those conversations around infrastructure, but everything from food to automotive to anything that is manufactured and value added, Nigeria is importing loads of, which means that Nigerians need dollars to do business. And if the Central Bank of Nigeria is setting the price rate that the local banks can sell dollars at, there is this official rate where by noon on the day, all of the dollars that the banks can sell are gone, and now a third party guy comes in and says, "Hey, by the way, I've got some dollars, but they're not going to be at the commercial bank rate because what's 550 Naira for a dollar? That's nothing. We can do 750."
Mm-hmm.
And you as a business person have really no choice because you need to do your business. So you take him up on the offer, and so you buy your dollars at 750, and everybody who wants to do business between noon and midnight on that day has to buy at this other rate, which is an unofficial rate, black market rate, whatever you want to call it. And so you've got these two parallel markets. Everyone who's got access to the official stuff, which is basically no one who doesn't have political connections, and then everybody else's market. And these parallel markets, they still acted within themselves as free markets. So the Central Bank of Nigeria obviously fluctuated what they said the official rate was on any particular day, and that affected its parallel market. But the parallel market had 12 middlemen and all of this markup and a bunch of people getting mad rich off of it. So that's what the past looked like. And it was very stressful because just there are certain things that you can't control, even if you're the Central Bank of Nigeria. Uh, you can't actually control directly the value of imports and exports coming into and out of your country. So you can't control the value of your currency. And, foreign traders don't want your Naira because they can't buy anything in it. So they want the dollars. And so effectively, you're still increasing the value of the dollar to the Naira until it reaches some form of equilibrium. And what that meant was that if you're a Nigerian company based in Nigeria and you get you've just closed your seed round or your Series A, by the time the money actually gets to you, you've lost 30% of it. If you're somebody who's trying to import goods to, do manufacturing or assembly, and you have to pay, you have to keep a dollar to Naira balance sheet, you are going to be extremely challenged because all of your profits are constantly being eaten away by the changes in foreign exchange. And that's just a problem that Nigerian entrepreneurs deal with. So anyone making money in Nigeria is why you should admire them even more, because anyone making money in Nigeria through any form of import export has their finger on the pulse and has an internal model of currency exchange that we can only dream of ever developing in our lives. But then what happens? What happens is we get a new president, and our new president says a bunch of really interesting things. But one of them is we're going to allow the currency to reach a natural equilibrium itself. We're no longer going to enable the Central Bank of Nigeria to set what the rate is. Commercial banks, you guys sell. It's a free market. Let's unite these two parallel markets. And what that means straight off the bat is that the Naira will, it will be less valuable compared to the dollar. And that's simply because Nigeria is exporting less than it's importing. And people want less Naira than they want dollars, obviously. And we're kind of in a place where we're waiting for that to settle. And every once in a while, in the past few weeks, we've seen reports of this kind of secondary market coming up again, this parallel market. And that's less to do with the price and more to do with the liquidity. It's got to do with who can get actual access to Naira when, and how much markup people are taking for being middlemen. And that really comes down to kind of democratization of currency access. And it comes down to enabling businesses, especially import or export businesses, to get access to the currency when and if they need it. But it doesn't solve the problem of a devaluing currency and that affecting my balance sheet when I've got investments, when I'm buying assets, when I'm trying to do business. And so in partnership with TLG Capital, our good friends and partners.
Is this Zane's firm?
Yes, this is Zane's firm. And they are, to us, incredible specialists in structured credit in Africa. Really some of the most creative and innovative approaches to how you finance small and medium businesses on the continent is coming out of TLG Capital. So shout out to them.
Oh, yeah.
They, of course, they buy the value prop of Vula very deeply because, we're a wonderful partner for them. They have a really specialized investment team that has, a limit on their time and attention and the ticket sizes that they can look at. But what Vula enables them to do is to kind of monitor the market, to syndicate demand for some of their products, and to basically save their investment team a bunch of time in finding the right deals and actually facilitating the due diligence process of that as well. Because anybody who's actually sat as an analyst on some of these DD teams knows that a lot of your time is actually spent chasing up targets for documentation, waiting for the right data to be delivered to you so that you can actually just tell what's going on. And so a big part of what we started building at Vula for the back end, for the investor side, is just tools that automate this process so that your analysts can, reach out to tens of companies at the same time and only kind of waste their time once all the data is in place. So our idea with TLG Capital is simply, how can we enable Nigerian companies that are export heavy companies to stabilize their foreign currency position while things are super volatile. And one way that you can do that is, instead of actually converting your currency, converting your dollars. Let's say you're doing exports, you've got some dollars, you need Naira to pay for your operations. Instead of just doing the conversion, which means that you kind of commit, you go long on Naira. Instead, you put that money up, those dollars up, as collateral. And by putting them up as collateral, it enables you to kind of to borrow Naira off of those dollars as collateral and get a pretty good rate without immediately committing to the full conversion. And why that's useful is because it effectively becomes a way to hedge against volatility. The problem is that, first of all, most SMEs just don't have access to a facility that enables you to hedge your dollars or collateralize your dollars against Naira in this way. And if they do, the rates are crazy, like crazy high. And so what we figured out is that by using Vula's technology to onboard these companies, and like I said, like save TLG a bunch of time because they're not looking at deals that are like under X million. We basically put these small businesses into groups, into tranches, and we aggregate their demand for the facility and enable them to get the same rates as a big ticket buyer would, but now they're just getting their little checks that they need. And it's really exciting, and the design of the product is pretty far along, and we're talking to some Nigerian companies that are looking to kind of test it out for us and pilot it for us. But it's a really exciting time because it proves a number of important things about Vula's technology. One is this idea of matching the right company to the right financial product, and being able to do that for investors who have all of the financial infrastructure in place, but do not have the team size or the inclination to go looking for small deals at the low end of the market or upstream. But the problem in an African context is that if you don't support the upstream investments, you don't get a middle market to invest in. And we don't have a middle market in Africa. I mean, we don't have a middle market for debt, really, outside of oil and gas and extractives and a bit of telecom. We don't have an exit market for equity, which is why I think like we really need to explore venture capital more and see what aspects of this culture we should bring into African investing and what parts of it are just pure emulation. And so because we don't have this middle market, we need the people with the infrastructure, with the talent to be cultivating the upstream businesses, but they don't have the time and they're not being paid enough. So this is really where technology comes into play, right? This is where the low overheads of having an AI that can identify these businesses, of using LLMs to generate really, really high quality investor ready material, to enable these companies to tell us more about themselves in a way that doesn't put the onus on the founder to sit and spend 6 hours describing their whole business, but very quickly kind of spinning up info and then collecting that all up and saying, here you go, investor. I know that you don't want to spend 5 hours on DD, but here's all of this company's registration info. Here's their balance sheet. It's automatically been analyzed by our bots, and they've given you all of the ratios that you need to see if this is the type of company for you, and they're all fitting within your bracket. And this is the vertical that you really like, and here it is. Do you want to get in touch with the founder because they're looking for $1 million and they're happy whether it's equity or debt or whatever? Like, we talk as investors as though like the target market really cares about where the capital is coming from. I think one of Vula's immediate insights was like, look, entrepreneurs are trying to run a business, and African entrepreneurs are mad practical. We don't see, oh, this is debt, this is equity, this is grants. Look, man, there's capital and there's terms that come with that capital. And the less terms, the better. But I need capital right now because I'm out here trying to make some money. And so for Vula, we're just uniting these capital markets and doing that, by having the relevant data.
Incredible. So, three things I want to highlight from what you shared here. First is the point that you make on cultivating small businesses and helping the top subset of those become these middle market businesses that can then become large cap over time. I think it's interesting because one of the core barriers that people kind of narrativize when it comes to certain kind of sub-markets in Africa is, it's really difficult because once you get to mid-size, that's when you start getting perhaps government trouble, or you start getting kind of regulatory troubles, etc. Maybe tax becomes more of an issue as well. And this is also a problem in Central Asia, like Kyrgyzstan is another example of a country like this. With that being said, it is also quite obvious to me that whilst that's a comfortable narrative to have, as we kind of perceive things, I think the narrative violation here is, because we associate tough bureaucracy and potentially corruption in some of these countries with the markets, therefore we come up with this story of that being the kind of cause. But I wonder if your suggestion is far stronger here, because if you look at the kind of talent that exists for these small to medium-sized businesses, or the small ones that can become medium-sized, that capital bottleneck is very real. And I'll give you two examples that kind of illustrate this shift in model that may be necessary, right? So the first one goes back to a previous episode with this guy, Zach Marks. Zach Marks is the founder of a company called Gia Finance, which does financing, crypto native financing and lending for small businesses. Think of like kind of Chaiwala-esque type entities, really.
Nice.
In Philippines, Kenya, and India right now.
Wow.
Right? And so when I say Chaiwala-esque, I mean these corner shops, very small businesses. And they have a very interesting kind of take on the data layer here. But in particular, the really interesting thing that he shared was a story of one of the entrepreneurs who has really benefited from the lower interest rates that come from their kind of lending platform, because she started off with really kind of like not capital intensive at all project, which was she would buy used clothes, packs of them that were kind of sent to Philippines. She would then advertise them on Facebook. And the way she advertised them, she used her charisma to do so. She would actually make these videos, and it was almost like the Home Shopping Network or something along those lines. And she built a reputation through that. She was able then, with the kind of cash flow and retained earnings, to buy and build a bar/restaurant. Now, in this bar/restaurant, she has cultivated a set of locals who love it very much. But just as interesting is, because of her relationship with Gia Finance, she's borrowing at a rate that's far lower than what most banks would kind of lend to you. And she's actually competing with the informal lending market that exists there. And what that means is she'll lend to her customers, for example, who need some money before kind of getting their wages at the end of the month or whatever.
Mm-hmm.
And here's the really smart thing, I think, which is the way that she holds them accountable is obviously she's gotten to know them. And so it's like an informal trust. But also, equally as interesting is there's a board in the bar. And if someone is late by one day, the first letter of their name goes up. If they're late by 2 days, the second letter of their name goes up. By the third day, it's like hangman, both
name and shame.
Normal capital. And everyone in the community will know, this person has not paid her back. How dare they? They're looking to kind of scale upwards. But the reason why I bring this up is because the archetype for entrepreneurship in developing an emerging market is very different to the kind of very clean and crisp story you hear about kind of Silicon Valley entrepreneurs. And so one of my favorite PDFs that I've read recently was 150 tycoons from China. And if you look at the origin story, it's similar to the story of like Adani, for example. It starts off with someone who's doing wholesale trading. It starts off with someone doing kind of waste management, some very kind of scrappy, small to medium-sized business type thing. And then they figure out how they unlock capital in various ways, obviously bespoke or institutionally kind of embedded with the growth story. But once that's there, that top tier of founder, they may have been doing something that you may have thought, it's a lifestyle business, it's a small business. No. They have the talent and capacity, but you just need to unlock that in the right way.
Exactly.
So what you shared is incredibly exciting, Nic.
I also want to build on that because I think when it comes to medium-sized businesses, like what we mean when you grow into that medium size, and like the model, like you said, like the model of saying, okay, well, this is when they run into trouble with governments, this is when they run into trouble with regulation, with tax, etc. Like that is true. Like I've also been there for those conversations, and that is tough. But it is also this question of kind of creating a critical mass of the middle, and what it means to have multiple diverse founders who have that sort of capital behind them, who have already achieved enough of their vision and who have proven themselves to have their finger on the pulse of the problems of their society because they've built a business that solves that problem. And that's not the only problem that they've noticed. And of course we've got a good proof of that in a Nigerian sense, because we have one of the only double unicorn founders in the world on our continent, and we're also proud of him. But it's the
Who's
idea of,
this?
okay, I start by trying to um, e uh, um, you start by trying to find a problem of, okay, how do I hire out this huge kind of pool of tech talent, um, and how do I get that out there to the world? And then I need to now pay my talent, and I realize, man, effective uh, there's no effective payment system. So let me now build payments as well. And you find $2 billion companies because of how talented and on the ball you are. And I think, like, again, like in the Western world, you're gonna say um, okay, well, it's the government institutions that are responsible for setting the regulation, for deciding how things work, etc. Um, but I also think there's something to be said about building up and providing more, equity in society to business owners who themselves are the ones who are building a bunch of infrastructure. To give you a clear example, we're one of the companies that we're working with have some of the largest farms in the Congo, and they farm what's it called, palm oil. And the thing about palm oil is that it's ready to be harvested in the wet season. But if you're in the Congo, the wet season also means that there's no roads. So what do you do when you need to transport your things across dirt roads in the wet season? You don't do anything. You allow the palms to rot, and you lose all of your thing. So what do companies do? They build their roads themselves. They build the infrastructure, right? Because they're making enough money that they can actually think about that as a long-term investment. They're working with the local government, but in the end, the local government, the municipal government, doesn't have the capital for it. They're busy applying to the International Monetary Fund to get a loan. And the company's like, look, we don't care. Just allow us to build this road because we need it and everybody else can use it as well. This happens all the time, right? Where it's not like this classic thing like the government will handle infrastructure and the companies will do business. It's like we're all in this together. We all need to build it together and like build the vision of what Africa can become together. And the more SMEs that are enabled to kind of flourish beyond this small scale thing, like the more will contribute to the building up of that infrastructure as well.
Totally. Two interesting examples here. One is at a time, the world's biggest company was this company called Redding and Company. Redding and Company was based, if I'm not mistaken, in Pennsylvania, I think. And Buffett was a shareholder of this company towards the end of its life. But when it was actually the biggest company in the world, its main value add was they would get hard coal for households to warm themselves up. They owned some of the most lucrative deposits around that area. And they also owned, and this is key to their company's success, they owned and built the number one railroad that transported that coal to ports, right? Now, in owning those two assets and creating those two assets and cultivating them, they ended up having the recurrent capital to then become a horizontal railroad company that expanded that railroad elsewhere. But that's a unique example of, it's not a government that's financing that. It was folks in a joint stock company. And it started off very simple. It started off with mining coal. They realized they needed infrastructure. As they built that infrastructure, they realized hey, we're kind of good at building this infrastructure. Let's build more of this infrastructure in other contexts. And so I think empowering that is very key. But the second thing that you mentioned, which is also interesting, is this idea of creating a constituency amongst small to medium-sized businesses. If there's just one medium, if every single year, let's say the criteria to become a middle market firm, for argument's sake, this is not actually the right number here, is say $10 million in EBITDA, right? Or let's just say, actually, let's use top line revenue instead. Let's say $25 million in top line revenue. The measure of success for kind of growth should be how many firms go from small to medium sized every single year. Forget exit markets, forget valuations. You want to think how many folks reach that revenue point. Now, how many, if the number is lower than in most other regions per capita, and you have a history of not having that many firms get to that point, you only have massive firms that are politically associated or small firms, then you're by yourself in kind of negotiating power when it comes to institutions that are not very well built for your type of entity, and they see you as a money pot, right? Now, if it's not just you that's graduating to 25 mil, it's you and 50 other companies, and you all know each other, and you have the right collective infrastructure to kind of come together, suddenly you become a constituency that can say, actually, this is what we need to unlock growth, and we know exactly what kind of buttons to press to kind of do so, and we can do it together.
And
right?
I can give you a clear example of that, right? Like this is the Nigerian solar manufacturing ecosystem, right? In the past, let's say 5 years, who a bunch of companies with really talented CEOs and founding teams, who okay, we're not in a place to completely manufacture our solar home systems or solar cells or whatever, but what we can do is import the disparate elements of these electrical circuits and then assemble them in Nigeria, do that value added manufacturing. We need more manufacturing on the continent in general. So let's get that going. And then we sell because we've got a huge market all across West Africa. And the government have the regulations that are saying that we're not going to have the same type of import duties that are normally paid if we're doing solar and renewable energy imports. And that all sounds amazing. So a bunch of people go out to start these companies, and they're building it up, and it sounds really great, and they've got the market demand, and then the time comes for their import to come from China, of their solar cells and of their electrical circuits, and they're met by the guy at the at the port, and he says, "Pay me my import duty." And now you're standing there looking like a fool next to a government paper, and you say, "No, can't you see on the government gazette it says that we don't have to pay this. It's solar." He says, "I don't care. Do you see the government guy here right now? No? So pay." And you're like, "But that's my entire margin, right? That 15%, that 25%, that's my whole margin.
Yeah.
And you now are taking my margin, not because I don't have support from the government, not because the regulation isn't right, but because the experience of the actual individual entrepreneur isn't amplified enough, isn't large enough for anyone to hear them care." And so it's like, but if you have like a cabal of these medium-sized enterprises, they can bring attention to the government. And like, again, like this is why I was giving an example of E in Nigeria. Ian Aboyeji, who is like our example of like a multiple round unicorn founder. Because you were speaking about Nigerian Twitter earlier and saying that it's the most popping on the continent. As a South African, I have to say the Nigerians do very great things, but if you want a serious business conversations, yes, absolutely. Deep political discourse, I think they're on par. But I really don't think that anybody can compete with the South Africans on the memes. So I just needed to put that out there. But if you follow him on Twitter, you'll see very recently. He's been doing it, but like he is continually commenting on and giving really high quality analysis of, what could enable more entrepreneurship in a Nigerian context in terms of regulation, in terms of the government. And I'm sure he's being consulted, right? but it requires you to grow to a certain stature for the government to even consider your opinion.
Mhm.
And so again, it's this matter of, and he's got some incredible opinions, but again, we need more. We need 10 more. We need 100 more people with their own unique perspectives to come in and weigh in on these questions of how governments can regulate and create prosperity, but not just on paper, like in practice. Like, how do we stop working around government regulation and against government regulation? How do we start working with it and having it enable us on a really practical level, so that when the guy at the port says, hey, I don't care what the government paper says, I only care about what my pocket says, that there's some solution in place. There's some recourse for me to have, where I'm not continually victimized and found with barriers in every direction that I turn.
Very interesting. On the topic of regulatory structures that either inhibit or enable and accelerate uh, commercial ventures, what are the types of regulatory regimes, banking systems, and bureaucracies that you've had to deal with as you've been building Vula so far? And can you share any kind of earned insights that you think you kind of uniquely kind of come across as a function of that journey? I know you're focused on three particular kind of regions within Africa: Kenya, Nigeria, and South Africa. So I'm very curious about how those systems that you, as a fintech oriented company, may have to interact with, and how they differ, and what kind of lessons can be learned from that.
Okay, cool. I'm gonna speak about. I think there are like three that may be like. There's loads that are interesting, but I'll talk about three right off the bat. One has to do with kind of data and handling data, because we're handling lots of sensitive data. One has to do with international development agencies and some of the bureaucracy there and the challenges that they face. And the other one is kind of large commercial banks that are based on the continent and some of the challenges that they face and the bureaucracies that work there. So first of all, when it comes to like data handling, because you were just saying like we were just working on this now, so it's fresh in my mind. But basically, I mean, Vula is asking for a lot of trust as well from founders, because we're saying, give us all of your data business info, your registration docs, your latest bank statements, whatever it is, because we have this amazing AI that we're going to train to basically be a virtual CEO and answer all of the questions that a curious investor would require. And only those investors that you give access to that data will we be enabled to do. And I think like we have especially in Nigeria and South Africa, we have some pretty good frameworks for data protection and the way that you treat personal and business data. But I also think like if you're a company, never mind a startup, if you're a company who's operating in a geography and working on something like digital data, you just have to decide to implement the highest standards from the start, and not like be like geo specific and like pick the easiest one and say, okay, well, in Nigeria we don't have to pay for X, Y, and Z protections. It doesn't work like that. Like just identify the top data handling policy in the world, which I guess for us is like GDPR, because the EU really goes deep into it, and just assume that that's your standard and hold to that standard. And it's really good for two reasons. One, it reassures all of our partners because they don't have to worry about like, oh, is this like some fly by night data handling situation? But also, we're just not worried about changes in policies, as more and more countries in Africa start to kind of develop their own data protection policies, because we're just like, whatever it is, we know that we're at the standard already. So there isn't going to have to be some deep changes to the way that Vula handles the data, because we just make sure that we're handling it all to the kind of top policy that exists in the world. And I think if you're trying to do that with anything, it's better to just always aspire to uphold that highest standard, even if it seems impractical at the start. And like Elon Musk does this a lot with his companies, where I think it was like when they were preparing for the Tesla IPO, and he was just like, look, I'm running all of my private companies with the paperwork like they're already public, so that the moment I need to flip the switch, I make sure that the books are all clean. I make sure that everything is accounted for. I make sure that the standards that we're upholding already are in place, so that I don't have any problems with the SEC. And it's like, try to do the same thing in my mind. Just operate at top from the beginning with the really sensitive things, so that you don't run into challenges going forward. Let's talk about development financiers. The development financing world is a large and complicated one, and there's loads of bureaucracy. And the reason there's loads of bureaucracy is because in order to even get the mandate to help with the development of countries, you have to be an organization at a certain scale. You have to have earned the trust of sovereign governments. You have to have a certain set of pools of talent and experience within your ranks. And all of that also lends itself amazingly to bureaucracy. And what that means is that there's always going to be a challenge to move fast and move flexibly, and to take advantage of the latest technological, the latest hype cycle on whatever the tech is, but also like literally like use the latest tech to make your life easier. One of our really big clients mentioned that they basically have like a 4-month request cycle for their IT department, which means like they have to like write a whole report as to why they need the thing, and then they can like get a Bluetooth speaker or whatever they need for a particular project. But like also, if they want a new IT system, if they see that OpenAI has just come out with GPT-4 and they're wondering how they can use that in their daily work, it's like you're waiting like a year for that. And so this is also where I think the benefit of the startup world and the startup approach comes in, because you can be mad flexible and you can create a really workable solution and productize it and say, here it is, here's the product, here's what you need, and kind of bypass a lot of those internal bureaucracies that a lot of these very large organizations face every day. And again, like when it comes to bureaucracy, especially for development and impact organizations, it's this question of like, how do we monitor impact, and how do we measure it, and how do we know if a program has worked or not, and who are we getting our funding from, and are they actually happy with the outcomes of a particular program? And so much time and effort goes into reporting what's going on, reporting on the reporting, figuring out if the framework that we have for reporting is actually effective or not. Do we have enough data to even know if the program that we ran over the past 5 years is actually helping the entire economy of Mali? No, we don't. We never really do. And so it's really tough when there's this much pressure on you to have all of the answers as one of these large organizations that's spending tens or hundreds of millions of dollars. And everybody just expecting you to have an answer when like the reality is like there is no answer. It's not easy to know if you've just immediately had a positive impact over the next 50 years on an economy. But by forcing these answers, we also force some of these organizations to just sort of say things like just reach for a positive outcome and say, oh, look, these are the SDGs that we're obviously enabling. Here's our annual report. But when you talk to people on the ground, it's like, no, it's not that simple. We're not having such a good time. It's not that easy. And yeah, I think, I don't honestly, to be honest with you, I don't know how specific I can go into some of these challenges with, because these are some of the really sensitive challenges that our clients are sharing with us and that we're trying to work through them with. But what I can say that happens so much of the time is that the people who are holding the purse strings do not have the perspective that is needed to know what's going on the ground. And that's almost by definition. Because to be able to build, to gain the trust of an ecosystem, to make decisions over hundreds of millions of dollars, you kind of have to be far from the ground. And so there are just uncreative ways that money is being spent right now. And again, I'm a deep believer that technological approaches combined with changes in the ways that we build our communities and communicate with each other within these business ecosystems can enable the people with their hands on the purse strings to kind of to release them from the bondage of bureaucracy and enable them to actually take the creative decisions that they personally know would be more effective, but they just can't justify it to the board because you can't write it up in a 50-page document because you don't have the data yet.
Yeah. Very.
Lastly, banks. And you can cut any of this out. I don't know if it's boring for you.
No, this is incredible, Nic. Please continue, Nicholas. From
So,
Vula.
I think what's crazy about the situation of most commercial banks on the continent is that they were set up to enable large corporates, large industrials, oil and gas, extractives, bit of telecoms. Like that's what we do, commercial banking in Africa. We make a lot of money off of transactions. We make a lot of money maybe off of like corporate investment. Historically, commercial banks in Africa do not mess with SMEs. Like you already know this. Everybody knows this. I don't know if everybody knows this, but they don't. And they don't because we don't, like we spoke about before, we don't have a standard for risk. We don't have a standard for why it's worth taking that risk. And if you can make your like 12% per year, just like financing another mining project from Anglo, why would you bother with an SME? Like really, why would you bother? And that's like the basic story. So we have a history of banking institutions not being set up, number one, to gauge SME risk, to enable SMEs, but at the same time, they have an unmatched distribution network for financial products and services. Because they're banks in the end. Individuals are there, they're reporting that they have a business, business accounts are still held with them. But when the time comes to actually get like an SME loan, like you have to give me 5 years of your historical financial statements and they all better be positive. And I'm like, look, man, I've got like 2 years of financial statements and it's only last year that I started making a profit. But I've got this huge deal, right? And you're like, please. And they're like, no, we can't. I'm sorry. I'm not even, like the guy who's actually checking out the SME loans, like, is just not even in the position to care about your business right now because he doesn't know your vertical and he's not specialized in it. And he's kind of doing a favor anyways, because his interest is in a whole different geography or a whole different, vertical. And so like what ends up happening is businesses just don't get financing, or they get wildly prohibitive APRs on their loans. And they still make it work somehow, or many of them don't make it work, I guess, because we don't have a middle market.
Here's a question I have for you. If you were to pick one entity we're just going to focus on Nigeria here. In
Cool.
Nigeria, they can either be lending right now or they may not be lending right now. Which is the number one entity when it comes to having data, in particular, something that can act as credit input data for SMEs in Nigeria? It could be a SaaS company that's well distributed and kind of interacts with a company's balance sheet. It can be telecoms, or it can be just a bank in general. But what's the most widely distributed, commercially penetrated kind of entity out there right now that has that data? Hopefully it's Vula in the future.
It's a really interesting question, like picking a single entity.
Widest distribution, depth of data can come second, but I'm curious mostly about widest distribution. There's like 200 million people in Nigeria.
But okay, we quickly need to talk about 200 million people in Nigeria.
Okay.
There are 200 million human beings in Nigeria, and it is growing very fast. But how many of them are really the consumer that you're thinking about when you speak about 200 million people, right? There's about, I'd say there's about like 1 to 2 million.
Yeah.
Right. Like we have disposable income. I think it's something like there's 1 million or 1.5 million Nigerians with more than $600 a month of disposable income. Right. So I get that Nigeria is super populous, but like unless your solution is targeting the base of the pyramid of those people who are seeking to really empower themselves from the ground up, I'm speaking farmers, I'm speaking basic education and access to education. I'm speaking basic access to food, water, energy. That's not your customer base, and that's not Nigeria.
Mhm.
So, um, like in there's two answers that I would give. Basically, one would be like Access Bank, right? Just a pure play, classic commercial bank, powerhouse of Nigerian financing. Why? Because they've got branches all over the place. And branches are important. Brick and mortar presence is important. As much as we want to talk about the digitization of the continent and it's happening, it's like, give me the brick and mortar. Because the brick and mortar is where people fill in forms, is where people provide their, their business registration data, is where they provide the information about the actual incomings and outgoings. And like, the reason why I would pick Access Bank is because they also, they have access to everybody's account data. We're based in the UK right now, where open banking has revolutionized what it means to monitor businesses, to have an open startup, to enable services to kind of tack on to your, to your business accounts. And the reason why I would go with a bank, other than just having the data on the businesses and their kind of daily incomings and outgoings, is also because in the end, if you just look at a bank account, there's loads of data that you can use to ensure that you've got like a trusted entity on your hands, that you're not being like defrauded, like it's not made up. Because in the end, you can't fake money. Like you can put money in and out of something, out of different entities. But if you have like as powerful of a system as we have for monitoring multiple moving parts, it's much harder to defraud if you have full transparency. The other one is, telecoms provider. Why telecoms providers? I have loads of friends. I have a good friend. Her name is Pelonomi Moila. She's running a South African AI company called Lilapa AI, and their kind of one liner is African solutions for African problems. And one of the things that I know she's going to be doing is really this idea of using telecoms data to create like an alternative credit scoring system for consumers. And like, I'm always interested in this question of like, where do we find correlations in behaviors for paybacks? And not like, actually, this is a huge point that I'm about to make here, Krish. You can cut everything else out. Basically, I think the difference is in working in EM, in working in emerging markets and not, is the question of whether companies and ecosystem enablers are observers and quantifiers, or whether they're going to do that and also roll up their sleeves and get their hands dirty. And everyone who's successful in Africa is not afraid to roll up their sleeves and get their hands dirty. Whether you're a VC or a loan provider or a company that's trying to enable a particular ecosystem, you can sit back and try to quantify the risk and try to come up with clever ways to observe the market. But if you forget the fact that you have hands and those hands can also go and play an important role in an ecosystem, you will lose out. And like a really clear example is basically like non-banking financial institutions that are doing loans. Many of them are finding out that if you take those unclaimed loans, like the non-performing loans, and you, instead of just like waiting on them or giving them to some like third-party Chinese debt collector to do God knows what with, you just give really friendly SMS reminders and tips on how you can go about paying back a loan. Like the performance skyrockets more than 35%. And it's
Mhm.
like, how do you change your mentality from simply being an observer and quantifier of risk, looking at data and saying, what can we say about this, and instead look at the data and say, what can we do about it?
Mm. That's actually incredibly interesting. I think um, the model that comes to mind here is something I mentioned in a conversation previously in an episode of this fellow called Elliot Pence, also from South Africa, who runs a fund called Tofino Capital. Tofino is a micro venture firm that invests in startups across Africa, mostly tech companies. And we were talking about the different models for a venture firm globally, San Francisco, New York, etc. And really, there's two categories of venture firms. One is you're either a great picker, you're trying to pick great companies and back them in the same way that when you run a portfolio that's long short for a hedge fund, you're trying to build a portfolio of great companies. And then there's another genre of company which only really became a thing in the last decade, which is we will help you build your company, right? And that's the A16Zs of the world and the YCs of the world. And in emerging markets, that's perhaps the seed stars, the founders factories, etc. And so I think in a context where, as you mentioned, there's going to be a lack of infrastructure, there's the need for kind of stronger institutional networks to fill certain gaps, if that makes sense. It's quite clear that having an operational presence, getting one's hands dirty, is crucial, and also it's hard to compete with. So if anyone else is interested in building their own, presence in that way, I highly recommend it.
Yeah, it's also the idea that I think in an African context, it's completely necessary to do both. You can't actually do one without the other. And like you gave Founders Factory as an example. They're a great example on the equity side, but there are loads of really interesting examples on the debt side as well. One of the unique, I mean, we've got a really unique reality in Africa, which is like our debt funds outperform our equity funds. Like that's unique, bro. Like we need to be observing that, and that comes from, as I said, like a history of commercial banks not being able to, provide immediate debt and even financial support, and our equity markets really only maturing over the past decade or so. So what does it mean? It means if I have to have a business, I need to be cash flow positive from the start, right? Like that's what it means. I'm not starting with this model of I'm going to like get equity and then I'm going to like raise the thing and then build the product and then do the MVP. It's like, no, I start with business. So like we've got TrendX might be really interesting for you. TrendX is another partner that we're working with. They are Web3. Shout out Web3. This is Krish's podcast.
Is this not a chicken chain product?
No, not a chicken chain product. I told you that we like Web3.
No, I like Web3 as well.
I put my money where my mouth is. Now, TrendX, what they do is that they help Nigerian companies to basically tokenize their real world assets. So they do like asset-based financing. They tokenize the asset and collateralize it, because in Nigeria, collateralization is a lengthy bureaucratic process. And then they put that up on their own market and also help to fund it. So it's like, they could have just picked one wedge in this value chain that we've just mentioned, but they're actually just rolling their sleeves up and they're saying, look, we're going to help you actually quantify the value of the asset. We're going to help you go through the process of the paperwork to actually collateralize it officially. And then we're going to tokenize it for you so that it's on a liquid market, digitized so that anyone can invest. And it's like, it takes that entire, the entire offering to enable some of these companies to do it. What's dope about TrendX is that they started with the obvious ones like mines and people with heavy machinery and whatever. But now they realized, actually, we can do the same thing for IP. So they're starting to support some Nollywood production studios in collateralizing their IP, which means that if you love Nollywood, you can go onto TrendX right now and finance the next Nollywood banger yourself and own a piece of the IP that comes out of that movie.
Shout out TrendX. Okay.
But these are the types of innovations and like getting your hands dirty that I'm talking about. Another one is like a much smaller company called Avovision. They're also super cool, man. Like these guys are based in South Africa. They are impact financiers / kind of an accelerator, incubator, enabler. And what are they enabling? Well, one of the types of companies that they're enabling are alien invader clearing companies. So in South Africa, you have a lot of alien invasive plants. Sorry, you thought it was going to get controversial there.
Yeah.
Alien invasive plants are a huge problem on a lot of the continent, because they came from Australia or South America, and they take a lot of water and they overgrow. And so if you're a government department and you have government buildings, these alien invasive plants grow all over dams and important infrastructure. So you put out a tender and you say, can somebody please come and clear these? And because it's you don't need a huge amount of tertiary education, it opens up the market to who can actually offer their clearing services. And so a lot of people who can just, have grown up clearing these things, who just need to buy, 10 chainsaws and have a pickup truck, can start to offer their services to a government. And if you can offer your services to a government, then your counterparty risk is actually pretty good, right? You can finance your operation based on counterparty risk because the government usually is good for it or more good for it than anyone else in your market. That's it. That's a really interesting piece of alpha. So if instead of just letting these guys wait for the annual clearing tender to come up, you start to encourage them to see themselves as a company and to go out and find more customers, like mines who also need these alien invasive plants cleared, or golf courses, or whatever. uh, you can really have a business that is very wide ranging and can enable a bunch of people who are at the bottom of the pyramid to start to build up their own income, to build up their own prosperity. And so Avovision kind of starts with this. They start by helping these guys, number one, register a business, kind of get it together, then build it up so that they go out and start to promote themselves to the private market. And by doing this, they become experts in what a good alien invasive clearing company in South Africa looks like, but like deep experts. And over a 2-year period, they prove their expertise by getting very superior returns. So that instead of them being funded, their loan book being funded by kind of the public purse and like public grants, they start to have a loan book that's backed by commercial banks.
Very interesting.
Very interesting.
These are some incredibly notable companies that you've shared. Ones of unique models that are kind of tackling problems specific to their geography. I'm wondering, final question for you is more kind of aspirational, more on the kind of like potential side of things. If you were to have a request for startups, you have a young uh, Nick Minion who's listening to the podcast right now. So Nick Minion, not from Vula, and he's got the same hunger and kind of talent as you, right? And he's like, what startup is there for me to build? Tackling problems. Well, fantastic that he's listening to this, because Nick's spent a lot of time speaking to people, working on fundamental business problems and who have fundamental, business and ecosystem problems. So what are some ideas or problems out there that you think others should be kind of spending their time looking at, and you think will be kind of both impactful and lucrative for prospective founders?
So what I will say is we look at demographics of Africa and we see median age is 19 and the age of our leaders is 63 median age. We look at our continent and we see that the broad base of people are still living, just hovering at the poverty line, and don't have disposable income and are trying to access these basic services. Like, for me, the first answer is don't underestimate the problems that you, young, beautiful person, are facing in your daily life every day. Don't underestimate your need, your desire to get your hands on a phone or a laptop because you want to educate yourself and push yourself further. Don't underestimate your need to, get access to a light in your home because you're sick of the paraffin fumes. Don't underestimate the opportunity that exists when you help your parents on their smallholder plot to grow fonio or grow potatoes or grow cabbage, and the opportunities there are to innovate there. I'm speaking to a particular subset of a young Nick here. I think that there is such a huge number of people on the continent who are seeking very simple and robust solutions to very simple, what look like very simple problems. We need to get people more access to education. And education doesn't just mean schooling. Education means the ability to investigate reality, to test your model of reality, and to create solutions for that and reflect on the solutions that you're creating. And so, access to technology, access to the things that keep you alive, like light and energy and food. These are all the basics, and it sounds kind of boring, but it's like farming and energy and education and basic technology. And there are 5,000 ways that you can go about enabling that. There are so many parts of that ecosystem. Whether you're building, a new, a new laptop for students on the continent to access. Forgive me, Heavenly Father.
Beautiful.
Welcome to East London, everyone.
Yeah, this is East London. This is not TIA. This is
Oh, yeah. That's Caribbean right there. No, I guess all I'm trying to say is like, I know a guy who he grew up in a village. His mom spent a bunch of time saving so that he could get a laptop, because she knew that if he could get a laptop, he could teach himself how to code and he could become everything that he needed to become. And like, she saved, bro. Like, she spent a lot of time saving. He spent 3 years saving up so that he could get access to that thing.
incredible.
He got it. And what did he do? He's created a way for parents like his mom to finance that purchase, to create a network of trust, of people who are building trust, building their own road, their own track record of trust. But they're parents of kids who want to see their child succeed beyond just like basic schooling. And so he's figuring out new forms of financing that can enable that. I have a friend in Kenya. She, her parents were selling vegetables, mom and pop store type situation. They needed financing to enable them to get access to the next level of farming implements to increase their output. And so she's just created a green financing bank to to enable people like her parents. Like, the problems are not far from you, is what I will say after a very long way of getting here. But the problems are not far from you. Just like, look at the problems that are in your life. And if you feel like you're unique in one particular dimension, but that you and your friends and your community are facing these similar types of problems, then you've got a market. Just trust yourself, basically, and then try and solve it.
Okay.
Useless, but also very true.
I appreciate that sober analysis there. I'm somewhat far from these markets, and so I feel like my problems might be slightly different to maybe the markets I find more interesting. With that being said, I think one way in which hopefully I'm channeling Nic's advice and energy here is this podcast solves part of the problem, which is trying to get visibility into these markets that I've not spent much time on.
And if you want to, go and live it. You know what I mean? Like, go and live it. It's going to be very hard for you to solve a problem if you haven't lived it. Totally. I don't think, I after my undergrad, I went and lived in the rural Eastern Cape of South Africa for about a year and a half, working with young people coming straight out of high school, running youth empowerment programs. Like, I don't think without some of those perspectives on what it really looks like to live in a place with a prosperity vacuum, that I would have some of the perspectives that I've needed to start Vula. Like, go and live it. You've got loads of time. Like, spend your time wisely, but don't think that you can solve the problem from far away, I think.
I agree completely. And I like the term prosperity vacuum. That's a great one right there. In any case, we're going to wrap this up. Nic, do you have any final comments, questions, suggestions for listeners before we end this, wonderful conversation? Thank you so much. But yeah, any final thoughts?
It's first of all, it's a very exciting time to be alive. The world is going through loads of changes. Old ways of doing things are breaking down by the second. And the world is in desperate need of people who are positive, who are optimistic, who have a story about how we can take the next steps together. And it's a story of unity, it's a story of diversity, but it's also a story of power. of the amazing power that human beings have, and like all of us get to participate in creating this story. And Vula is our contribution to that. But we know that there is so much more that needs to be done and that will be done. And it's a wonderful time to be alive. So like, jump in, don't doubt yourself, make it happen. Get in touch with me. I'm always open. If there's anything that's interesting or that you'd like to talk about, hit me up. Krish will put my details on the podcast.
I will indeed. Thank you so much, man. It's been wonderful, and all the best.
Thanks, bro. You too. Thanks for running this dope podcast. You're a boss.